Hello, I'm Thomas Hare, Chief Content Officer of the Performance Driven Marketing Institute, a not-for-profit trade association that serves companies in the performance and direct-to-consumer marketing world. Welcome to the latest episode of Take 20, created by the PDMI Brand Response Council. These 20-ish minute live conversations featuring leaders in the performance marketing world speaking about the hottest topics in the industry are scheduled twice monthly. This month we've got three because May 1, May 15, May 29. Every other week, guys. Before we get to today's conversation, a housekeeping note: we'll be addressing any questions from the audience at the end of today's session, but you don't have to wait to ask them. Utilize the questions tab on your control panel to type and send your question in. We'll be collecting them and we'll try to get to as many as possible in the final moments of the episode. As performance marketing has evolved and consumers and marketers alike marvel at creative and media targeting excellence and successful campaigns, services on the back end of a direct-to-consumer campaign often are overlooked for their importance in any success. In this third and final of a recurring series during the first half of 2024, Take 20 host and PDMI Brand Response Council Chair Chris Foster of Modern Postcard today welcomes leaders from the payment processing world to discuss the latest and greatest information on the hows, wins, and whys of performance marketers' expectations of their processing partners. With us are Chuck Nadd, co-founder and CEO of FlashCash, and Bill Ranta, Vice President of Revenue for Verde Payments. Welcome, everyone. Chris, take it away.
Great. Thank you so much, Tom, and welcome in, gentlemen. Very excited to have you guys here. Like Tom mentioned, the business services that make the performance marketing ecosystem function today are in the spotlight. Payment processing is that beautiful moment when all the hard work of performance marketers, call centers, QR codes, ad spends, impressions, click-throughs, signups, and all that stuff finally means something when the customer actually shows you the money, when they actually pay and we process that payment. So new technologies on payment methods and behaviors are really changing the way consumers buy and pay for their desired products, right? I mean, now Zelle and Venmo are ubiquitous, but at the time when they first came out, they were pretty interesting and new. But they've evolved into direct buy QR codes, subscription management, global payments, and more. So we're going to unpack some of the new ways payment processing has both reduced friction and made it easier for customers to act when they say yes. So Chuck, we're going to start with you. Firstly, thank you for your service to the country and the military. And secondly, as habits change, so do expectations of ease, right? Customers now, it's so inconvenient actually to get up out of your chair and do something. You need to expect it to do it wherever you are. So how important is capitalizing on the behavior kind of in the moment of a scan and purchase from direct TV spots?
Absolutely. First of all, thanks for having me, Chris and team. So FlashCash is really focused on one thing, and that's making a frictionless payment process as easy as possible. And that first word, frictionless, is really what you're getting at, right? Because if you can make it as easy as possible for the consumer to go directly to a payment page, to pay with whichever, it's not enough just to get them to the payment page, but to have a really easy way to have an out, right? To have credit card, Apple Pay, Google Pay, Cash App, so on and so forth. You really incentivize that user, that potential client, to get checked out and to get checked out in a hurry. I just like to imagine, the world where we've been and think about how many potential sales have been lost because people have misdialed a 1-800 number because people haven't been able to get to their phone quickly enough. Now, as technology advances, to the point of your question, right, you have the opportunity to capitalize much more quickly. FlashCash is doing that with a QR code solution that goes directly to a payment engine. It's easy to set up and it's a lot of fun, honestly, for the user to have that checkout experience without having to download any app or do anything like that, really to be able to check out in 10 seconds. It's that frictionless part of the experience, as you alluded to, that's so important.
It's interesting too. When you think about the customer journey, everyone knows it from awareness, interest, education, etc. Once they decide, at that point on, the decision making all the way through the action, and finally the retention, the advocacy, it's almost as if that needs to be the easiest part of it, because everything else was the hard work of the consumer arriving at the choice to buy.
That's exactly right. You've gotten them so far. And again, imagine all the customers or potential customers that might have been lost, over the last 10, 20 years because we didn't have such an easy way to make the checkout experience happen. So when you put that much of an investment, for lack of a better term, to get the customer to that point, why wouldn't you go that one little extra mile to really see the conversions where they need to be?
Yeah, no, that's interesting too. And subscription programs make that so much more easy, right? Because once you sign up, It's almost like a set and forget. And there are also these moments where you don't have a card present, right? You might be in a situation where you're like, oh, the card's somewhere else, or it's not actually on you. So Bill, I guess my question for you is, in terms of subscription and card not presence, what is iPay doing?
Well, we're doing a lot. Subscription changes the game in terms of liability for any payment processor. Payment processors are set up in a variety of forms, right? PayFacs are out there today. Direct processors, issuers and acquirers can be one. That's a Chase type of example, where they're a giant bank, and they're actually a payment processor as well. We're what's called the super ISO, right? We own our own direct bins. And that makes, we have big boy pants on, right? Because we own the merchant's liability for a period of time while it's on our platform, okay? And when you change it into a subscription, that means we own whatever they're selling for whatever period of time. If the item comes back in the form of a refund or a chargeback, or the merchant is no longer there, then that's a bad day for us, okay? And that's the liability food chain of a subscription. So how are we helping them, right? We're giving them advice and management. So finally, my gray hair is paying off, right? That's a good thing, because I've been doing this for so long, and I've seen some gigantic campaigns, and right when subscriptions started taking off with like Proactives of the world and stuff like that. And it's not easy, and you got to manage the tsunami of transactions, because that's also a problem, right? If you're not buying enough media and you're not pushing your sales volume enough, chargebacks and refunds, the liability, so to speak, are in arrears of the transaction, typically about 2 to 3 months in arrears. So if you don't buy enough media and you don't push your sales number and you keep the throttle on that, then you're going to be upside down, and the card brands, Visa and MasterCard, are going to get mad at you, because they will say you're damaging their brand reputation, okay, if your refunds and chargebacks are high, okay? So we have to go into different modes to keep track of subscription programs for merchants. How are they selling? What are they selling? Who are they selling to, right? That all matters, right? The style of pitch that they have. 10 or 15 years ago, it wasn't that way, right? It was, hey, here's 4 card types and a cloud of dust, okay? Call us when you code to this spec and we'll get back to you. We'll board you. That's not how it is today, okay? Now we take a look at all that kind of stuff because it's all liability, and we've learned, all right. And I'm a product of state school. I joke about it all the time, but you learn, okay, and you learn from the second place trophies in your closet, and you learn when merchants go bad, okay. And you hope that never happens again, because the liability can add up in a hurry if you're on a subscription or a custom type of order of any sort. So subscriptions, chargebacks are, the 3 to 4 months in arrears. They're also on a time interval with the payment interval on a subscription, right? If they're selling a 90, a 120, or maybe a yearly subscription, processors and the banks behind them will not go over a year, right? They won't go for a lifetime subscription or anything, right? That's endless liability. Why would we do that, right? So usually in the 3rd or 4th installment, if you're doing a recurring bill or a subscription model, that's where the liability starts to come in, and that's where the refund and chargeback is going to be elevated and at its highest point, because the consumer that bought that item, right, at that point, maybe they have too much of it. Maybe it's not working. They took a pill and they didn't get smarter or better looking. Oh my God, you gotta be kidding me, right? So anyway, we're rolling our sleeves up and we're getting involved with them. We're trying to help them out. We're also policing. We're watching 24 hours a day. We have to have those kind of systems today, because they might start off with us selling, XYZ product, and then they take a left-hand turn, and now they're in the cannabis business. And we're like, well, wait a minute, that's a different MCC code and a different, totally different ball game right there. We got to underwrite differently, right?
So, it's interesting, Bill. It's almost, if I'm reading this right, and please correct me if I'm wrong, please. payment processing seems like it's a very specific activity, right? A very specific action. However, based on the liability, the changing nature of subscriptions, the whims of your customers, you've actually had to expand your role into management of programs, understanding of programs, and almost a holistic coaching mechanism so that you can guide your clients into proper behavior. Is that accurate?
That's very accurate. We have to do a lot of, I guess, coaching when they come in. Let's say they're brand new to DR, okay? They don't know what they don't know. They will make every mistake possible in the world.
Sure.
And one of the biggest ones is they run out of product on the fulfillment side, and they want to keep feeding the beast and selling product, and people want their product, but they don't have enough, okay?
Right.
And they don't have a chance of getting more in stock, right? Because they didn't anticipate the rush on their product.
Mm-hmm.
And that creates all kinds of headaches, not just because you can't sell product, right? Because now you've got a liability problem on your hands because you're not going to be able to, keep the volume at the current levels to sustain, the necessary percentages that, Visa and MasterCard require you to do to be clean.
You know what? That's so interesting because on the earlier Take 20s, where we had the phone centers and we had fulfillment, now we've got payment. I guess, Chuck, I'll ask you, are you in touch with those businesses as well if you've got a client that all these business services are serving, are you in touch with those other partners on the client's behalf?
Absolutely. We all know that it can be a pretty fragmented landscape with different vendors having control of different parts of the process. And ultimately, clients want a really simple way to fulfill their customers' orders. So what we do is we plug in very easily with the different fulfillment companies, with the different advertising agencies, so on and so forth, so that you can have a really streamlined system. I had a commander in a previous life when I was flying Army Black Hawk helicopters in Afghanistan who said in his thick Southern drawl, if you're everywhere, you ain't anywhere. And I think that's true in this realm too, right? You really have to be focused on what you can do the best. And then by creating a team that's really aligned and knows how to carry that client and consequently that customer through the process, you can have a really, really successful flywheel.
That's interesting. And you were just talking just now about some of the programs that you're doing where you've got to be flexible and you have to figure out where the customers really are in terms of where they're purchasing. It seems to me that with the QR code, the scan to purchase isn't just limited to TV, right? I could see this happening in things like in restaurants or retail or stadiums. What markets are you guys working in, and where do you see a lot of lift and traction?
Yeah, it's a great question. And the reason that we really jumped headfirst into this is because throughout history, right, every payment solution has been a one-to-one ratio, right? I'm going to give you this batch of gold for this camel. I'm going to give you this $5 bill for these hot dogs, right? It's always a one-to-one relationship. I have to call a 1-800 number and talk to somebody on the other end. Now with QR codes, you could theoretically sell to 100,000, 100 million people at the same time. And that's what's really revolutionary about what's going on here and why FlashCash really, like I said, dove headfirst into this. So by that same logic, we're going after what we call high traffic hubs, where there are a lot of people in the same place, a lot of eyeballs looking at the same screen at the same time. Think stadiums, think airports, places like that, where there's a lot of interest and a lot of eyeballs on the same screen or in the same area at the same time.
Roger, that makes a lot of sense to me. So one of the things that we're talking about is not just the changes of customer behavior, but the changes of the landscape too. We all know that data privacy is a big issue. We know that that's going to continue to be a big issue and will never stop being a big issue. And so, Bill, I think that one of the things that you guys do really well is understand tokenization. Can you explain the tokenization and what that actually means and why it's important in today's data privacy-centric marketing environment?
Sure, I'd be happy to, Chris. So tokenization has been around for a while. It's been put on steroids by the fraudsters that are out there trying to steal the money from the merchants and ultimately the processors. So by tokenizing a transaction, we take the 16-digit string on the card, the credit or the debit card, and we issue a surrogate number for it, a token, if you will, right? That token can then be stored on our systems. And let's say you're doing a recurring bill, since we're talking about subscriptions and recurring, right? We can pull that token out. We can update the credit card with different, let's say the date on the card is going to go bad within the period of time that you're on the subscription plan with the merchant. We can update the card at the point, right, because of the token. And the token is useless to a fraudster if they get a hold of that, because we store the tokens. We're what's called level 1 PCI compliant. We have the mother loaded data right down to your mother's maiden name. Someone has to. That's us, right? And we can't give it out to the marketers, even though they want it. But the point of it is the storage of the item has to all be locked down, right? And how we store it, that's our secret. But we're audited, and they check all that kind of stuff every single year to make sure that we have the necessary firewalls and protocols and procedures about tokens. And we take those numbers and we break them up and we spray them over a bunch of different servers. So even if you get part of a token, it's not going to be the credit card number, okay? Right. So it will not be tied back to you in any way, shape, or form, right? And it's not a bank account number or anything like that, right? And they're portable as well. So if you decide that you don't like Bill Ranta anymore at Verde Payments, right, you can take it and go somewhere else. I'll be sad, right, if you do that, but you know what? Those are your customers and your data. So if you're gonna, get in bed with a processor for the long haul that understands direct marketing, you should know the little tiny things like that, because some processors make it very difficult for you to take your ball and go home, right, or go somewhere else, right? And in Visa and MasterCard, right? They've started to embrace the tokenization effort, and they want people to use tokens. So if you use, there's new technology out there from the card brands, the associations, and if you frequent a website, let's say, outside of the subscription or recurring bill world, that if they have your token on file, that shopping cart will recognize your token. You don't even have to pull out a card, right? You can be a lazy shopper at that point, and and the token will be recognized, and that's all the processor on the back office pinging that shopping cart, and they're sending a call basically with a descriptor flag on that. I'll spare you the details on how it all works, but we're watching 24/7. We have to be, but that's something rather new that's come about in the last year, right? And the card associations have to sponsor that in order that to happen. So
sure. Well, and that's something that's new that's come about in the last year. And I imagine that the technology and the environment's changing all the time. So next year, this conversation is going to be different, right? So I guess maybe my question for you guys is, what are some of the new developments in payment processing that we should be paying attention to?
Let me go quickly on that one, and I'll leave some room. Fraud tools are paramount to the effort that's happening. Fraudsters move very fast, right? Fraud tools have been around for a period of time. The card brands, let's call a spade a spade. The card brands want fraud tools out there because, number one, they own some fraud companies themselves, but they want those transactions to go through, and they don't want their brand and their shiny image damaged at all, because that's who's sponsoring the Super Bowl. That's who's sponsoring Wimbledon, right? You're going to see them at the Indy 500, because they have that kind of money, right? It's all these fraud tools that are out there that people buy, they're not tuned correctly. So what we're finding is you can't just say, I bought a tool and I have that, but it doesn't work. Well, the reason it doesn't work is because you didn't tune it correctly, right? The tool works, but you don't really know how to do that because you're not a fraud expert, you're a direct marketing expert, right? Right. So we have people on staff that actually do that on their behalf, right? And we don't even leave it up for chance anymore. We put it right on their pricing schedule, and they say, what are all those numbers? And our salespeople are instructed to say, hey, that's for when you get in trouble, because we know they're direct marketing and they're going to get in trouble. So we turn them on and we enable 8 different services up to, if we need to, in order to keep their wheels on, right? Because keep in mind how we get paid. If they sell and authorize and settle and clear, then we make money, right? If they don't do that, we don't make money, right? And if they get eaten up by a bunch of fraud, guess what? They're out of business.
Right.
So we can't have any of that stuff going on, and they're the typical tools. Verify, Ethica, CE3 is a new one. It's a way to thwart a chargeback altogether, right? In a recurring bill scenario, which is something that a merchant's never been able to do until now. and they can actually say, oh, this person, they bought from us 3 times before on a recurring bill scenario, or there's a subscription customer of ours, and now they're trying to charge it back. Well, guess what we can do? We can make the bank eat that chargeback because of new technology called CE3. So it's changing, right? I can't sleep on payments, right?
Sure.
I've been doing this 22 plus years, and I'm learning something new every single day, right?
That's awesome. So
Well,
Chuck, what are you learning that's new? What's new in your world?
Yeah, I think very simply put for us, and it kind of dovetails nicely with what Bill just said, is defrictionalization, right? It's creating an ecosystem where it's both safer and easier for the consumer, the end consumer, to buy products, to buy services. And when we think about using the internet in 1995, 1996, 1997, right, it was this very rudimentary experience. I would argue that a lot of our payment systems are still that way, right? If you're trying to get somebody to pay for something, do I do it on Venmo or Zelle or Cash App? Well, turns out Venmo and Cash App, have 60 to 80 million users in the United States, depending on how you calculate it. So that's a lot of folks who either are not onboarded or who don't know how to use it, don't use it on a regular basis. And so there's a huge opportunity up ahead for finding the ways to defrictionalize technology for payments. And that's what we're really focused on. And I think it goes hand in hand with what Bill is saying, right? It has to be safe, it has to be effective, but it also has to be efficient. And that efficiency is really what we're going after at FlashCash. And I think that'll be a hallmark of what we see over the next 9, 12 months.
Awesome. So one of the comments that came up as we were emailing about this broadcast is the concept of an e-wallet. I'm not super familiar with that is. Can you describe what that is?
Sure. So about 10 years, maybe 10 to 15 years ago, they started to pop up. They kind of remind me of the tablet computer, right? It was launched, it fell on its face, and then Apple put a different set of lipstick on it, and then everybody had to have one, right? So e-wallets first popped up when PayPal first stuck their head up, because that's what they were. They were a wallet at that point. And they have made a huge comeback recently with gaming and gambling type industries, and they're all direct marketers, right? They're coming after people at their home. The rules in states have changed. They allow people to, I put a bet on the Derby today, right from here, right where I'm sitting. And you used to not be able to do that. I used to have to slep to the track and put down some money. So these type of applications, they can run afoul with payment processors very quickly. So utilizing alternative forms and methods of payment in them are paramount, right? So wallets pop up. Think of it as an electronic wallet, right? It is a place to store electronic funds that can be utilized for good, not evil, right? There's a concept of cashing out and paying out in the digital world. And let's say a gamer or a gambler wants to, he wants his money into his wallet, right? I mean, he might want to switch and go to something else, right? Or a different game, or totally leave the platform altogether. Well, he wants to be cashed out, right? And he wants that money in his wallet. He might come back, he might stay, he might keep playing, right? But if he wants to get paid out, maybe he wants to go to dinner and he's done, right? His wife's, saying, hey, get off the damn computer, let's go, right? That's a different concept, but that has to happen 24 hours a day, 365, right? And the way it happens with banks today, and automatic, banking as a service type applications, it can't happen 24 hours a day, and it can't be instant. So we've gotten smart about stuff like that, and we've built the ability for merchants to actually do those things 24, 365, right? And because that's the way their buyers are doing it. So we got to be in lockstep with them, right? So we've had to get smarter from taking care of a merchant perspective, because there's money to be made there. Why wouldn't we do that?
Sure, that makes sense. That makes a lot of sense.
Yeah, so you approach that, you approach the different problems, and trust me, they pony up the scenarios to me every single day. If I don't hear a new, can you guys do this, right? And I'm like, let me think about that, right? Like maybe we can, and I'll make some phone calls and dust off my Rolodex, and sure enough, I can put some things together and we can make it work, right? But the e-wallet functionality is back. It's safe, right? A lot of people don't trust it, but I say, get on board, okay?
It's going to happen.
And I'll quickly add to that too, that from our perspective, we plug in several different e-wallets that people can use, right? And that, again, to the frictionless piece, allows folks who already have these, existing e-wallets where they're already onboarded to check out more easily, because their e-wallet API can directly plug into our platform, and so they can pay for whatever is being advertised instantly.
What's interesting is that as the technology moves, I think it's just going to get easier and easier for consumers. They'll wave a phone, maybe they'll blink, maybe they'll move their eyes, they've got the chip in their ear, but it's going to be easier, I think, for folks to actually pay for the things they want to pay, how they want to pay it. So this has been fantastic, you guys. It's already past the time, and we're ready now for some questions from the audience. Tom, do we have some folks who have got some ideas or questions for these folks?
Yeah. We've got like 3 or 4 good questions here we can look at. First one that came in: consumers get how to pay via credit card. However, how long does it take a normal consumer to adopt a new means of payment?
Well, it depends, right? We've got everybody trained to use a debit or a credit card right now. So alternative form of payment, they're going to have to get their head around it. And number one, it's going to have to be safe. They're going to have to feel safe, right? They safeguard their banking credentials like you read about. So anything that's going to touch that, and they're going to have to put that out in the open forum, they're going to panic about it, right? I'm not, right? Because I'm in this industry, so I'm a bad resource to talk about that and how I feel about it. But let's take a look at my school teacher wife, okay? If she walks into a store and they say, you got to download an app, and then we're going to scan this off your app, and and then you can make a purchase transaction happen, she's going to turn around and walk out, okay? Because she wants to use her little debit card, because that's the way she's wired, okay? She's been buying that way for a long time. So alternative forms, Apple Pay, Google Pay, Chuck's symbol, right? Those types of things. It's not that we can't integrate into the payment page for any merchant with those types of things. It's which ones are going to make it. We only have so many technical resources, and how long are they going to be around? And then, of course, you asked the question, the adoption curve on them, right? Is that going to make sense? Because it doesn't make sense for just 1 or 2 merchants, but if it's going to be, thousands of merchants adopting that technology, then I'm on board, okay? Because, we're going to make money on that somehow, some way, because that's how we get paid.
And to add to Bill's point, I think what's really, really important is that consumers have the option between several different new ways to pay, right? And so when somebody scans our QR code, right, off of an ad, let's say, they're not sent to the App Store, to the Play Store to download a new app. Again, to Bill's point, they're sent to a payment page that has those options so that they can be checking out in 5 to 10 seconds. And I think that optionality is really, really the key, because not everyone is going to adopt the same payment platform. But if you can give folks that optionality, you'll see higher adoption sooner.
Makes sense, guys. Thank you for that. Data and security came up a little bit. The regulatory environment is pretty crazy right now. How crucial is a data processor's or some processor data security protocol given that environment?
Pretty crucial. I liken it to when Experian got breached a couple years ago, right? Everybody lost all their credentials when Experian got breached. That can't happen, right? They're a credit agency, okay? And I get a lot of questions from people saying, did my stuff get stolen when that happened? And the answer was, yeah, it did, right? It's so bad today, Tom, that I tell people, if you're holding a debit or a credit card in your wallet, consider it stolen already. They just haven't gotten to it. They're going to test it, right? And then they're going to sit on it, and then they're going to bang the card, right, when you're least expecting it, okay? So that's why, this type of stuff is out there, right? And it's unfortunate it's gotten that bad. This stuff's available for sale on the dark web and all over the place, and that's organized crime nowadays. That's trying to sell it, but it's come from lack security functionality. And like I said earlier, we do have the mother-loaded data. When we authorize a card, we are checking a bunch of stuff on the front end, or even a debit and a credit card. There are several checks that go on I won't get into, that allow us to drill into it, put a hold on funds, all kinds of different things, and we're getting set up for a settle and clear. And that happens in milliseconds, right? Because that's how fast we have to be. Because on the other end of the line, you might have a happy clicker, right? That just sent 7 orders and said, hey, this isn't fast enough, right? And they click 7 times on their mouse, and 7 orders just came in. Well, we killed 6 of them, we kept 1, right? So we have that technology that's already built in, but they didn't think about that, right? Yeah. So, and again, that kind of stuff we had to develop. So, so we do have to have huge security measures, and we have to always be watching, because I'm sure as we're talking about this, there are hackers watching us right now, right? Because they know we're sitting on tons and tons of money. Because keep in mind what we do for a living, we deliver bags of money to people every single day, right? So,
all the functionality in the world doesn't matter if you can't keep it safe, right? And it's that balance between keeping the ease of use simple, but having that iron-tight, ironclad solution, right? And it is a a healthy tension that happens between the two of them. But ultimately, if you have the best system in the world and all your customers' data is getting breached, it's worthless.
It is funny, Chuck, you mentioned that it is the duality of the consumer expectation. Make it as easy as possible for me and keep everything safe. And I want both.
Yeah.
Right? We have a pretty antiquated banking system in the United States, right? That's set up on a pre-digital mindset, right? And so as we transition over the next decade or however long it's going to take to a more digital world, right? That's going to be the deep tech struggle that's going to be happening. Again,
well, maybe, but banking institutions, they're so nimble and fluid, they change so rapidly, right?
Yeah.
But you can see how hard that is, right? To set up the entire infrastructure for a banking process that has existed for decades and decades. I mean, I'm old enough to remember when the debit card first came out, right? And people were writing checks and people had cash. And now, you can scan, you can float, and it's a completely new world. And it's going to take a while for the large institutions to catch up, I think.
Absolutely. So Bill's point about tokenization, I mean, that's what's going to drive it, right? It's these new ways of doing business. It's going to be an exciting place to be over the next 10, 15 years.
And let's face it, banks are risk averse, right? And they don't like a lot of change. Most of the old bankers are gone, they're retired, or they were furloughed. The new bankers are there and they don't have the knowledge, right? But they also come with a new way of thinking, which breathes life into banks, because banking as a service is now on steroids and people want to use that, right? But again, the security is paramount. So what do you mean I got to give up my account number? No way, I'm not doing that, right? So there are tools that are out there that we can get around those types of things.
Yeah, and I was surprised at how easy some of this stuff was. My car got hit by somebody and we had to go through insurance, right, to get stuff and paperwork. But I was on the phone with them and they said, well, how do you want the check? How do you want the cash for the collision coverage? Do you want it Zelle? They didn't even think about writing a check and sending me a check in the mail. That wasn't even in the options that they gave me. And I was like, yeah, Zelle's fine. And a couple days later, I'm like, oh, look, I didn't do a thing. It just magically floated into Zelle and then into my account. And to your point about, the ease of use, Chuck, the less things that we have to think about as consumers, especially the way payments are made, what a clunky thing to think about nowadays. I want to buy, just make it happen and keep me safe.
And there's a great video out there floating around of when credit cards were first introduced to Burger King or McDonald's. I think it was 1993, and folks just looked at it like, this is crazy, right? Like, I can see a credit card on vacation or something, but not for a $3 Big Mac or whatever, right? But one, the adoption happened clearly, right? That's how people are paying at fast food restaurants now too. But two, ease of use won out, right? Because carrying cash is clunky, it's difficult. And to your point, Chris, if you're able to make that process simpler, you're going to see more revenue. It's that easy.
Yeah.
Yeah, cash is definitely going away. So
let me wedge one more in here before we go. It's a good one. If you have an e-merchant sitting in front of you looking to launch their first direct-to-consumer campaign, what's the one thing they should know about processing right off the bat?
It's not all about price, right? It's about the quality you're going to get. Everybody's going to get a good price. There's too many processors out there that cow's already left the barn, for God's sakes. But that's the number one thing they ask about, right? This has to be fairly priced. And I'm like, wow, okay. I said, so let me explain it to you, right? That's like 5th or 6th on my list, right? Because I've been doing this forever, Tom. But they got to be stable. They got to be up. The service has to be reputable, and they have to know my vertical market, right? And again, it goes back to the experience and the know-how of how to treat people in this space, right? Banks are getting pretty sophisticated. Behind me stands a bank that guarantees me, okay? And some of these, I used to think it was all created equal. No way, right? They base their opinions off of the throughput that they've received from the payment processor over their longevity, or what's called a BIN, right? We have a BIN at that bank, and the bank's called an acquirer. And some banks will only take, I'll give you an example, Telco and WISP from us, right? But they won't take any of my supplement products or affiliate marketers from us at that particular bank. And I say, well, why do you do it that way? And the bank says, because you guys are really, really good at this particular vertical, and you have expertise on your legal side and your processing side to know, like when streaming, take a streaming customer, where that actually content comes from, that's not pirated, right? So, and I'm like, oh, okay, so that makes sense. I'm like, and we have something called a BIN reputation now, which we never had before. So issuing banks, the people that stand behind the consumers and their cards, they now have a reputation on me, the processor. So if I have way too many direct marketers and they're the bad seeds, right, that are selling products that, rope, soap, and dope, or whatever it is that they have, you name it, we've seen it. And, they might say, hey, you know what, we're going to flag these types of transactions because they're coming from the same processor, and we don't like that they have so many of these guys in their portfolio. That used to never be a thing, okay? And in the last year, it is now a thing. So wow. We have to be very cognizant of that because they could be harming authorization rates and we don't even know it, right? It's not the merchant's fault. So we got to be careful.
I think what I would add to someone who's jumping into the space is thinking about segmenting, right? Because it's a basic in advertising, but it's so important now with payments because not everyone is paying with credit cards, right? There are the Cash Apps and the Venmos and the Zelles of the world. There are the Apple Pays, Google Pays. There are so many different ways to pay that you don't want to limit who you're allowing to pay because you might have a 19-year-old who doesn't have a credit card but does have a Venmo or vice versa with an older segment. So it's really, really important to think about who you're marketing to and build a payment platform and a payment solution into your advertising that matches that segmentation. And that's something we'd love to help people do.
That's great. Hey guys, tremendous stuff. Chris, thanks for running the guys through a great set of questions. And thank you both, Bill and Chuck, for sharing such incredible expertise. We appreciate it. For those of you watching, our next Take 20 episode is set for Wednesday, May 15th, when Chris will host a group of CTV experts who will discuss the latest changes on the landscape. Please visit thepdmi.com/take-20 to register for the webinar and check out the upcoming schedule. Finally, online registration is open now for PDMI West, October 7th through 9th at Hard Rock Hotel San Diego. Our early bird special pricing on badges for performance marketers must attend event of the fall are priced at just $295 for PDMI members and $495 for non-members through June 14th. Our specially priced hotel room block for the show will be available tomorrow for badge holders only. Visit thepdmi.com/PDMI-West to get your badge and get in line for your discounted hotel room today. Thanks again to all of you for checking out this episode of the Take 20. Thanks, Bill, Chris, and Chuck. Be well. We'll see you soon. Bye-bye.
Thank you.
Thank you.